What's going on, guys? Mike here, and today I want to talk to you guys about high interest savings ETFs and how I utilize them. Um, these are an ETF, they're not like an actual bank account that you would deposit your money into, like EQ Bank, which I shared in the last video. These ones are basically like you're purchasing a share, like an ETF, but they have very little risk and are basically act just like a savings account. So you can see here the one that I technically use all the time myself, which is the ticker symbol PSA, the Purpose High Interest Savings ETF. Now, if you look at it in the past year, you'll think that wow, like the the trend looks really weird, and the reason why that is what ends up happening is they basically set a price of $50. So this is how it kind of acts like a stock, but it's not. So you buy in at $50, or you could technically buy in at $50, or you could buy in at 50.05, depending on what time it is up during the month. But what you'll see here is basically it goes back down to $50 on the first of every month, and while it accumulates over the month, it pays out the dividends is what it ends up happening. So there's about, I think it was like $3 billion that's in this fund, and so everyone buys in at 50, or as long as you buy in at the start of the month, and over the next 30 days that $50 will accumulate its interest. And right now, I think with current interest rates, we're at about 4.84, 4.89 with PSA. So like I said, you also notice how it gets bigger, but that actually just shows the trend of the Bank of Canada interest rate going up, which I'll show it a little bit later in this video here. But yeah, so again, starts at 50, accumulates to the end of the month, and once it hits the last day of the month, it actually will declare its dividend, and then of course the money comes out of the fund and drops right back down to $50. And then in a few days, if let's say in this month here, okay, so it was at 50.19, you'll actually receive 19 cents per share of what you own. So last month it was 20 cents, I believe. Yep, so 20 cents. So I received 20 cents times the amount of shares I own, and it goes right back down to $50. And again, we just start all over again. So again, so just a little more information on this particular one. This is the one that I chose to put my money into. So yeah, again, Purpose High Interest Savings Fund. So I actually have the brochure opened here. So kind of just goes over a few details on, for the Canada and what series they are. So I just go into the regular, just PSA. So the money is in National Bank, Scotiabank, BMO, and CIBC. So they have the funds distributed between those banks, and of course it just calculates the interest like a high interest savings account, but it's through an ETF versus going directly to a bank and putting your money in there. And these are typically pay higher than a traditional like just savings account through a bank, just because with the high amount of money that they're dealing with, that they're able to get a better rate than a retail investor like us. So yeah, so that's that. And of course, there's always the question of what are the cons, what are the risks. Now, in my last video, I talked about the CDIC insurance that you would get when you deposit money into a bank account. So this one, you actually would have no CDIC insurance. Now, the reason why is because it's through an online broker. Like you're buying an ETF stock. It's not that you're just taking your money and putting it into a bank account anymore. You're buying a share, and even though the share just goes down to $50 every first of the month, it's not insured the same way. Now, if like your Wealthsimple brokerage went bankrupt and you lost your online broker, now that's insured, but CDIC doesn't insure companies going under, which kind of makes sense. If you bought into Microsoft and Microsoft went down, you wouldn't get your money back through insurance. So again, so you're not CDIC insured, but the way I look at this is the money is in National Bank, Scotiabank, BMO, and CIBC. So if there was an actual issue, I would assume that the world would be collapsing at this point if those banks went under. So, yeah. So, like I said, I use it. I just wanted to share that with you guys. So the way I use it though is, when you're doing your own investing, DIY, everyone refers how they have kind of like a cash position. So instead of my cash just sitting there doing absolutely nothing, whenever I have an accumulation of dividends or just regular cash, I don't let it sit in my cash account. I will buy a $50 share each in increments, obviously, and let that hold so that I can at least accumulate my 4.89% interest. So just kind of going over this a little bit more, you'll see here, I just kind of went to dividendhistory.org, and you go see here, back in February of 2022, they were only paying 2.1 cents a share. And that's obviously a direct reflect of the overnight rate only being at, I think, 0.25% at that time. And then ever since the interest rate's been going up, you can see every month the interest or the dividend payout has been increasing. And the last month here, in just last February, was the highest at 20.55 cents. So as long as the interest rate stays high, you can assume that this will stay the way it is. If it were to drop back down to 0.25%, like as in for like the overnight rate, then you'd expect 2 cents again. So it really wouldn't be much of an increase, but something is better than nothing, I guess, in my opinion. So I really like these. There is also other options out there. So like this one here is cash.to. This is Horizon's high interest savings ETF. It performs in exactly the same way, right? So they did the same thing, $50 each month, accumulates the interest, and then they pay out the dividend, drops right back down to 50. So most of these you can get in, you can buy in, like I said, Wealthsimple, Questrade. Some of them, like if you're investing through RBC though, you won't be able to find this because it technically is in competition with theirs. So RBC has their own interest savings ETFs. This one is I think it's a RBF 2011, if I have to go off of memory here, but they're paying 4.3%. So yeah, if you're on, like I said, at a Wealthsimple or Questrade, you can go into those cash.to. There's HSave. Then the PSA, which is the one that I like. You can utilize that for your cash accounts and get some interest while you're waiting for the big dips to buy into. So anyways, I hope that was informative. I hope you enjoyed the content. Like always, if you have any comments, please comment below. And yeah, thanks for watching.